To get things started, we can roll the video. Great, I don't have to say anything at all. So that video, I think, is just a snapshot of how far we've come as kind of a payments and commerce ecosystem, but also some of the enormous opportunities and perhaps some of the challenges that we've got to face. And as D-Hawk said, and it's interesting, you know, that statement that D-Hawk said about money becoming electronic and just a matter of electrons moving around the world, he said that 60 years ago. And so it's interesting to be here at this NOAH event that's evolved a lot over 10 years, and we see fintech is an increasingly important part of it. And this is, as well, Visa's 60th anniversary. And we've obviously seen a lot of change in the past 60 years in terms of our ecosystem. As the video pointed out, over that 60 years, based on D-Hawk's vision, you know, we've created this enormous payments ecosystem, more than 20,000 banks, 50 million merchants, more than 3 billion cardholders. And as the video said, there's been two pieces that have made Visa successful all the way along. One is we were like the original fintech, right? It wasn't called that then. It was called payments, and it was a little paper card that said Bank Americard on it. But we were a fintech. We just didn't know it. And technology remains at the heart of Visa. And I would say over the past 5 years, we've really worked internally to transform even our culture from being a payments company, which is, I think, the way we were looked at 5 years ago, to a technology company. And we'll talk a little bit more about that on the panel. I think the second thing I'd say is that partnerships has also been at the key of Visa. If you take a look at that ecosystem, acquirers, merchants, banks, consumers, you don't grow that ecosystem without a focus on partners. And interestingly, for the first kind of 50 years, it was a bit of a closed ecosystem because we were trying to achieve scale. And so we'd have merchants, acquirers, issuers, and the network in the middle. But as I'll talk about in a few minutes, we've had to change completely the way we think about our ecosystem and about partnerships in order to address some of the things you saw in that video. So when we look at the landscape then, and this is just an introduction to the panel, and that introduced some of the themes, we are undergoing unprecedented change in the payments and commerce landscape. And witnessing kind of unprecedented innovation at the same time. If you take a look at what's happening on technology, whether it's that mobile centricity and almost mobile becoming the first ubiquitous technology in the world, if you take a look at the emergence of operating systems and applications and how dominant they are in terms of driving consumer behavior, if you take a look at the emergence more recently of artificial intelligence and machine learning and how that's now creeping into everything, including payments, if we take a look at blockchain and the emergence of other ledger-based technologies that arguably, on top of the Visa network or other networks, can create even more flexibility in terms of how we think about commerce. If we think about augmented reality and virtual reality, moving from a gaming relationship to where there are now apps where you can make in virtual reality purchases using your voice and your irises. We're already there. If you take a look at the complete transformation of the point of sale, where it was very well understood what a point of sale looked like 5 years ago, but now, through companies like Square and iZettle and SumUp and others, through near point of sale technologies, order ahead and all those models, payments moving from physical point of sale to the cloud, the emergence of Amazon Go, and I understand more recently, some other big brand names on the high street are moving to that model. The point of sale isn't even a point of sale anymore. Commerce is happening everywhere. So technology is one of the themes that we think about as we've got to expand our base of partnerships at Visa. The second thing we think about is the changing role of the consumer. As a result of the power of mobile devices, the emergence of social networks, the ubiquity of operating systems and apps, consumers are in more control than they've ever been. Right? So again, in terms of a closed ecosystem where the focus was really on the issuers and consumers and merchants were kind of takers of services, it's not that case anymore. Consumers expect their payments to actually look not like the next best mobile banking app or the very best mobile banking app, but the very best app, period. Consumers expect mobile banking and commerce to be like Facebook, like WhatsApp, like their best enterprise app, their best gaming app, their best music app. That's the benchmark, not just the best banking app. And so consumers are driving a rate of innovation, forcing banks, merchants, acquirers to think differently about how they build those consumer experiences. And then the last thing that I think is happening is regulation, which has always played a role in payments and financial services, is playing an increasing role. And that's obviously here in Europe when we think about PSD2 and GDPR, but it's global. Some of the concepts around open banking and driving innovation and lowering costs and introducing new players, these are global phenomena. They're concentrated here in Europe, which is why it's such a fascinating place to be in payments right now, but it's happening all over Europe. So when Visa looked at our heritage for 60 years and then all of these changes, there's a number of really substantial things we've done over the past 5 years to change Visa from that payments company to a technology company. The first thing we did is we created the Visa Developer Platform and created our first open APIs. So you can go today to the Visa Developer Platform, register, and depending on who you are in the ecosystem, start working with Visa APIs in a sandbox environment and use some of the capabilities we've built to build new solutions. That's the first thing we've done. The second thing we did 5 or 6 years ago was start a strategic partnerships team. We recognized that it wasn't going to be just the banks driving innovation in payments, it was going to be all these new players. And we started with what we call the really big technology players, Facebook, Amazon, Google, Microsoft, Samsung, Apple, etc., and developed new relationships with them to keep them inside the payments ecosystem and help them innovate. But then we've gone to many smaller partners. We were an early investor in Square, in Stripe, in Klarna, in Marqeta, and even smaller companies like Solaris Bank and Behalf. And so we've become even more active when we think about partnerships in terms of expanding that ecosystem. And we have very active discussions with more than a couple hundred strategic partners around the world that are starting to drive commerce. The third thing we did, and this is more recent and focused in Europe, is we started a Fintech program. I mean, one of the themes of this event is the emergence of fintechs. We've identified now more than 200 new issuing fintechs, just neobanks, that are launching or planning to launch in Europe alone, more than 200. And I'll be the first to say that Visa was late to realize how quickly some of these were going to grow and how quickly consumer adoption was going to happen. But now we've got a dedicated fintech program with a dedicated business development force, a change in our rules, a change in our membership requirements, a really proactive approach to supporting these fintechs as they try to get off the ground. And we're going to talk about that during our panel. And then the final thing we announced back in May at Money 2020, or June at Money 2020, was the creation of a dedicated venture program for Europe, where we've earmarked up to $100 million over the next 4 to 5 years to focus on a broad range of investments across fintech technologies as, again, we expand our focus on partnerships and continue to broaden the ecosystem. So, as D-Hawk said, in trying to create this ecosystem 60 years ago, partnerships has kind of been at the key. It's never been more important. We're going to have to continue to think differently as new players, new business models, new technologies come into play. And that's really the focus for the panel. So that was just an introduction to the panel, and now let me introduce the panelists, and we'll get started. First, I'll introduce Kyrre Riksen, who's a co-founder and CMO for Jaja Finance, which is a mobile-first credit card, and he'll talk a little bit more about his company. We've got Laura McCracken, who's the head of financial services and payments for Facebook, a company probably most of you have heard about. So I'll ask her a separate question because you guys all know who Facebook is. And then we've got Virraj, Jatania, the CEO and co-founder of Pockit, which is a UK challenger bank. So again, a good panel representing this diverse ecosystem of partners that are emerging. Visa works closely with all of these, and we'll have a chance to explore this partnership theme a little bit more. Now, is there a mic here? So, Kyrre, I'm going to start with you because not everyone in the room may understand, what Jaja does. So, spend a few minutes talking a little bit about yourself, Jaja, how you fit into this kind of commerce ecosystem, and then just an introduction in terms of how important partnerships were with either small companies or large companies in terms of getting your company off the ground.
Yeah, so my name is Kyrre Riksen. So I have basically built my career working as an entrepreneur. Basically, I would build ventures within a larger corporate, which means that whenever we get investments to scale a business, it has to be scalable. Otherwise, we won't get the funding. So that's in my DNA. And this time, I'm really pleased to announcing that we will be launching Jaja soon for the public. In fact, Jaja is so what we have done is to build one scalable platform that can cater to different credit products that will help people in the different circumstances to manage their spending, their credit better than with today's offering in the market. We launched with UK Walmart 2 weeks ago. We launched instant online credit for e-commerce, first with the George brand. And back in May, we issued the Jaja card and app, which is really about making it really simple to manage your credit card in a more digital way for busy, impatient people. And I would love to talk more about it, but that sums up basically what we're doing. And we are basically going from beta to public beta in January. Thank you.
Virraj, with Pockit, maybe talk a little bit about kind of where Pockit's come from, where you guys are focusing now in terms of a challenger bank in the UK, and kind of where you are in your evolution, and if you can, a little bit about how partnerships have helped.
Yeah, sure. So I'm the CEO and founder of Pockit. We are a digital bank focused on thin credit file customers across the UK. So we really target sort of the bottom 26 million in the UK market. We provide a digital current account, very simple onboarding, 2 minutes, people can get an account with us, and then do all the day-to-day transactional banking that you would imagine, so paying bills, sending money domestically and internationally. And then we provide now 2 lending products. So one is a salary-backed loan product, so customers can borrow up to 10% of their annual income as a loan through Pockit, and then pay that back through their weekly and monthly salary payments. We have a second lending product which is just about to launch, which is a revolving line of credit, so £250 real time, sort of effectively like an overdraft. And then the third product we have is a product that helps customers to build their credit score and credit history. So we're feeding our data into the likes of Experian, Equifax, Call Credit, and helping customers to build up their score. And we've already had pretty big impact on that side. About 80% of customers who've taken it have seen 40 to 100 point increases on their credit score. So we're really kind of moving across I'd say 3 core verticals in financial services around delivering these products to our customers. So that's lending, savings and investment, and then insurance. And the way that we think about partnership, and partnership's been a very sort of core part of our ability to grow and deliver the product that we've built, is kind of fits across 3 areas. Supply chain partnerships, so that's like the likes of Visa and processing partners, where it's really kind of the pipes and the delivery of the platform. Then sort of customer acquisition partnerships, so can we partner with organizations that can help and yield and get us to acquire more customers. And then product partnerships, so we don't want to build every single product ourselves. We want to work with selected partners and build a product that we want to control the user experience, but we don't need to be the underwriter from an insurance perspective. We don't have to have the loan sitting on our balance sheet. And so that's how we kind of think about the partnership angle.
Yeah, I want to come back to that, because I think that model of not building everything yourself and moving more quickly to partnership models is something that we wouldn't have thought about the same way even 10 years ago. Before we come back to that, Laura, Facebook obviously a big tech, but it wasn't that long ago that Facebook was a small company. And so in your evolution, you've dealt with big companies when you're a small tech, and now even bigger companies as you seek to continue to expand Facebook's offering and global reach. So talk to me a little bit about how you think about partnerships today, both to focus on emerging technologies, to continue to innovate, but as well the big global players that you work with today.
Okay, great, thank you. I'll take that in 2 parts. So first, Facebook and how we work with the broader ecosystem and entrepreneurs and fintech players, et cetera. So as you know, as you mentioned, Facebook has only been around for about 14 years. So launched in Zuckerberg's dorm room, and today has grown into the world's largest social network, social media company, of 2.2 billion on Facebook, 1.5 billion on WhatsApp, and about 1 billion on both Instagram and Messenger. So I think what we've developed is a really great platform that engages and hopes to connect the world and builds meaningful communities, and also a very engaged customer base. Quick factoid, I was reading the other day that this is not just Facebook, but the average customer around the world, the average person around the world spends 135 minutes a day on social media. That's almost over 2 hours a day. So you're talking about a highly engaged group of people that cover almost half of the adult population around the world. So I think that's what we bring to the table. And Zuckerberg would say he's very lucky to have happened upon this and have benefited from the network effects that help to scale the business so rapidly. But he would also say that couldn't have done it without partners, and couldn't have built such a meaningful platform for consumers without partnerships. What I brought my Bible called Platform Strategy, and after I joined Facebook, I read this book, and I wanted to read a quote to you that's really meaningful to me by Tom Goodwin. Uber, the world's largest taxi company, owns no vehicles. Facebook, the world's most popular media owner, creates no content. Alibaba, the world's most valuable retailer, has no inventory. And Airbnb, the world's largest accommodation provider, owns no real estate. Something interesting is happening. And so back to Zuck, I think we made a strategic decision early on that we wanted to create an open platform. And so we developed the developers platform to enable people to create experiences for customers. And it started off as games and social experiences, but we're evolving now, and this is really day one, into fintech as well. So we have a developers platform on Messenger, and we're starting to get partners developing things like chatbots, et cetera. And one of them, for example, is Plum. I don't know if you guys have heard of Plum, but Plum, yeah, I'm seeing some heads nodding. Plum is a company that helps people to save money. It connects into their banks and monitors their spending and behaviors and patterns, and helps them to save little amounts of money every single, a couple times a week, and makes it easy and effortless. And they decided to launch on Facebook Messenger because they recognized the fact that we had a lot of people using it, and it would give them a platform to grow from. And that was a strategic choice they made. They might make an app eventually themselves as well. And on top of that, they've partnered with a peer-to-peer lending platform that enables people to make more in interest rates. So I think that's a nice little example of how we can work with startups. And Plum is definitely a classic UK fintech startup that was able to leverage our platform to build something new that's meaningful for customers.
So Kyrre, I want to also come back to how you work both ways with partners. Kyrre, in terms of Jaja, you guys are very close to kind of commercial launch. You're going through kind of an open beta now, and you've worked with Visa, you've worked with other partners. What are some of the lessons learned from engaging partners in terms of lead times, complexity, what's worked and what hasn't? What are some of the things that you would take away as a startup trying to work with big players?
Well, first of all, depending on your situation, but I can speak for myself. Two things. In my situation, as a startup, you are vulnerable. And the second thing is when what, for example, a player such as Visa helps is to bring certainty. So I used to manage a global partnership for mobile financial services launches in 7 countries. And that was with MasterCard, sorry. But this time with Visa, which I'm really happy about, is that our principal membership status allows us to issue products on behalf of other retailers and brands, which gives us a flying start, because it's really amazing to get the traction and the excitement up front without us actually having to do the work. And that helps us as a startup get the buzz out, and it also helps to bring credibility, because once we have launched our beta, everything works. We want to repurpose this and make this accessible, because due to open banking initiative and so on, it's all about sweating your assets. We have a license, so we cannot only grow through one organic route, in our opinion. We need several rails, and together with Visa, as a principal member, we are able to take on the world.
Virraj, for you, describe for me a little bit how you see the underbanked opportunity in the UK. Just to give everyone an idea of kind of how you think of the scale of that opportunity and what the UK landscape looks like.
Yeah, sure. So I mentioned sort of briefly, we really focus on, I would say, the bottom 25 million consumers in the UK. So that bottom 25 million can't afford a £250 surprise in the month vis-a-vis the income that they have. So very much living kind of on the breadline. And what we've found is that right through the product stack, so all the way from day-to-day banking of an account and paying bills, all the way through to lending and savings and insurance and other products, that group are really, really poorly served. A lot of them are going to payday lenders, doorstep lenders, check cashing shops, cash money transfer services, like Western Union and MoneyGram, and all of these are offline, opaque, expensive, don't really solve the user's problems, and that's where we see we just see a huge opportunity to kind of really take on that space. And if you look at the European market, it's about 170 million people, so including the sort of 25 million in UK. So you've got a pretty big market kind of on your doorstep where it just hasn't had the attention that it needs. And we're seeing just a very interesting opportunity around building an amazing product that customers love using. There's huge virality. About 50% of our customers every month come just through referrals. So we're seeing a really interesting opportunity to kind of take on that market. And as you start launching more and more products, you start realizing that you become more and more applicable across that sort of lower income segment.
But it's interesting in 2018 that the cost of financial services is the highest for that segment.
Yeah,
right? So
yeah.
We haven't solved that yet.
No, we have. I mean, I was looking at some stats the other day. The average cost per year is like £200 per year for just very simple levels of banking for this segment, which is pretty high. It should not be that expensive. I think we're about 10 times cheaper for versus that number.
And you talked earlier in your introduction that you've really focused on, obviously, building your business around a core differentiator, but moving early to partnerships. You realize you don't have to do everything or build everything yourself. Is what Pockit focuses on kind of a deep understanding of the market and kind of UI UX, or how would you kind of describe the secret sauce for Pockit, where you need to develop, and then you can rely on partners as well?
Yeah, so the way that we look at it is, for us, it's really about building like the best-in-class user experience, amazing customer service, and building the right product set. One of the things that we've seen is that, you know, unlike some of the other sort of fintech digital banks that you're seeing out there who are kind of going down the marketplace route, where there's lots of different choice, what we've seen is that a lot of our customers actually don't want to make, you know, they don't want to look at a loan and say, I have 10 choices about who I take the loan from. They trust us, their salary's coming into our account, we're building that relationship with that customer, and then providing the, you know, the right products for their needs. And so we really see ourselves as kind of the center of that hub, and then we're building out lots of spokes, which should be the other products that customers need. So we really see, and so partnership is a huge part for us. As we, you know, both our lending products are being done through partners, our credit building products through a partner. So there's some things that we will fully want to own in-house, like the day-to-day transactional banking side, international remittances. A lot of that stuff is managed internally, but we think partnership is a great way for us to grow.
Thanks. And Laura, in your introduction, you talked about how the move for Facebook has been relatively recent into commerce and payments. Obviously, P2P, we see that, and we work closely on that together. What is your focus in terms of looking across all of the Facebook assets and the kind of the commerce priorities that you see?
Yeah, commerce is definitely my number one priority. So my role is to lead payments and financial services partnerships in Europe and Asia Pacific. So we've always accepted payments for ads in games and donations. Not always, but we do accept payments for ads, donations, and games. What we don't accept payments for are Marketplace, Instagram, and we're just now getting into P2P as we've launched with Visa in UK and France. But we're developing conversational commerce and P2P and even P2 micro merchant via messaging platforms. So my focus at the moment is finding the right partners. Finding the right partners who can help light up as many countries across Europe and Asia. And of course, I've got a colleague who does Latin America and US, et cetera. So finding the right partnership who can help us to scale quickly. And one thing I can tell you about Facebook is we move incredibly fast. I've been on a 6-week sprint the last 6 weeks, and from beginning to end, we've like basically designed how our checkout would look like on Marketplace and Instagram, and have determined the right partners and are finalizing term sheets, and hopefully we'll have something launched by Q1 of next year for both Marketplace and P2P payments.
Okay. Kyrre, coming back to you for a second. Jaja's close to commercial launch. You know, it's interesting startup in a very fast-growing fintech environment. What do you think is going to cause or going to change the most in the next 2 or 3 years? And how do you think about Jaja's focus, whether it's geographic expansion, broader product lines? I mean, what are some of the trends you see that would affect the way you think about Jaja and how it's going to grow?
Well, the trend is that people are getting a lot more impatient. So we are trying to live up to these demands. Like, for example, when you sign up for credit, you don't sign up for credit to go through the forms and wait days for your car to arrive. You sign up and you sign up to Uber. You sign up to book a hotel room. You get it instantly, regardless of where we are. And we're trying to create this fluid experience that I love about Facebook. I mean, I'm maybe spending 2 hours myself. Okay, so I think so we're really trying to create this product for this type of people that expect things to happen now. And I think that's a big change. And I also see that the attention span of people is really changing. So that means that we must be relevant at all time. And that's why we are going through the pains now to work on 2 products in parallel. It would have been easier if we launched one product yesterday. But we want to go through the pains because at the same time we are launching the Jaja credit card for the public. We have launched instant online credit with Walmart UK, fine-tuning critical capabilities such as scoring, collections, repayments, because this is not all about creating a sexy front end. It has to work end to end. Likewise, we have also been in meetings with Visa, all the global partners that we can potentially white label our solution for, which allows us to make design decisions in the user experience at the outset, not later. Because I've been in so many situations, we do something, and when the customers are there, it's too late to change. So we are really, I would say, looking forward to bring something for the people who are really impatient, who would be surprised that, okay, they have a digital credit card, but, they would be surprised that if they make a big ticket item, they can convert that to an installment loan, for example, which typically is managed in silos. And we want to kill the silos between products and focus on what the customer needs right there and then.
So this is a question for all the panelists, because we're rethinking our whole credit strategy at Visa, because we see as current generation, that are approaching 18, and certainly generations following, they don't think about credit the same way that I would in terms of revolving credit and having this line of credit through my credit card. But this series of very transparent, well-understood short-term loans for larger purchases, and that's just how they're going to manage their financial lives. Do you agree that that's the way it's heading, and that we've got to think differently about how this generation and the next are going to think about credit?
Exactly, and that's also the danger, because we love connectivity, but it can also be very dangerous. I used to create products for the underserved, and so it's very important to factor in socially responsible lending, and I think that's something we need to think about when we think about the future of credit, because we have a huge responsibility to ensure that we offer credit to people who are can afford it and are in control of their spending. Otherwise, everything you do is detrimental. So credit can be a bad thing, but we make it a good thing. So I think. And
Virraj, do you look at it the same way?
Yeah, I would say we look at it in a very similar way. I mean, I think, what we're saying is that customers want much smaller, much more manageable, super transparent ways of borrowing. So, like, for example, our overdraft product is 10p per £100 per day, and like and it's simple and it's easy, and that's what people want. They don't really understand APRs and all the complexities around that. So I think there's a real need to kind of really strip back, really simplify product offerings. And I think being responsible is so important. I mean, it's obviously for us, it's a huge thing. A lot of our customers would have been, maybe had bankruptcy before, or may have been in significant debt, or whatever it might be. So making sure you're lending to the right people is a really crucial element. And the fact that what we see as data actually becomes such an important part of our business, where we're looking at transactional data, so money coming into customers' accounts, where they're spending, the types of merchants, but then also overlaying that with behavioral data in our app, and how they're using the actual product itself is another big driver. So, but yes, we look at it in a very similar way.
And for you, Laura, I mean, as you look at your commerce experience, a lot of these decisions around transactional lending are driven through these social media experiences, and customer decisions are driven, through the people they have involved with their social networks and recommendations, etc. I mean, do you look at it the same way, and do you look at the way that you can think around, A, your social network, and B, some of the data that you look at to support these models, about responsible lending? It's going to be transactional driven, etc. Do you view it the same way?
I just view it in terms of trying to create as much choice as possible for the customer. Because I think in the old days, you just had bank lending, credit cards, and payday lenders, and maybe some loan sharks out there. And I think that there's so much room to create more niche credit lending products, and to letting, like the peer-to-peer lending I mentioned before. Because I think, that could be, our peer-to-peer lending could create whole new buckets that could really cater to people, and you could use the social element to try to ensure that people are keeping on top of their repayment plans, etc.
So we're last question before we make room for the next panel, because I think we're just about going to keep everyone on time. Fintech growing very quickly. You look at NOAH, it's not just about fintech, but it's becoming an increasingly important part. Entire new industries, unprecedented venture being invested now in fintech, more billions than ever before. We have the same panel 3 years from now. Fintech still growing, still a lot of innovation. Are we starting to see a bit more mature fintech industry and consolidation?
Well, I obviously see that's happening right now, and I think people realize they don't have to build it themselves, which is, I mean, if you look at, and since I'm here with Visa, let's just give a really solid example. As in a startup, you have to sell what you have or utilize what you have. Given you have scarce resources, right? But with the Visa scheme, for example, instead of just following what everyone else is doing, what can the Visa scheme do, and not think of it as a credit card? So what we did is that we just redefined it, and I saw actually that same scheme can be utilized for instant online credit. The only difference is that the customer doesn't see the BIN number, which is not obvious for everyone. But as a startup, we can do that, and we have it ready in months, and we are live. And I think we need to realize that we can't do it ourselves. I'm so happy. I used to be traveling in Asia, setting up different services, and also in Eastern Europe. And the main problem was identification and KYC and AML. But nowadays, we have these solutions that are sort of become commonplace, which allows it to scale and really to make sure you can, you don't have to go through a new project every time you go to a new country, for example, which is fantastic. So it's a question to you.
But you sound optimistic that innovation continues.
Because the financial service has typically been local. So typically when I go to a new country, they say, no, Kyrre, it doesn't work like that in this country. Because then they look at it from the regulatory lenses, and you cannot unify the experience from a country B to country C, for example. And I think that's going to be a change, that you will see more global players emerge in this space.
Laura?
3 years from now, I'm hugely optimistic and excited about open banking and what PSD2 has to offer. I think that there's a lot of trepidation in the market, is understandable with the banks being a bit nervous about this development. But I imagine in 3 years' time that the banks will become platforms or marketplaces. So they will have their trusted clients and customers, but they will open up and they'll take a page out of the Amazon's books of the world, where you have your own business, but you also have a marketplace, and you enable the fintechs of the world to really offer diverse services and tap into your platform. And I think that I'm not a zero-sum game person.
Right.
I believe in the theory of abundance, and there's a lot out there.
And I think the most progressive large banks have gone past this fear of compliance and having to build out that API to looking now that they've had to build it, what does that mean in terms of growth and strategy? And hopefully the most progressive banks are doing that. Virraj?
Yeah, look, I'd echo what Laura and Kyrre said, that I think we're in a really exciting phase. I think 3 years from now, fintech will be continuing to scale. When I launched in September 2014, there was nowhere near the ecosystem that exists today. We couldn't even find someone in Visa to speak to. now, that's a very different world. Now it's a very different world.
I hadn't moved here by then.
and so it's evolved so much, and it's been incredible. And I think in 3 years that will continue to grow. I think the other thing that I think is really interesting is when you look at fintech is, especially sort of in the banking side. If you think about how big the market is, there's a lot of talk about, when you talk to investors or stakeholders, and everyone's like, yeah, but there's so many of you fintech banks and all this
crowded space and whatever.
But when you look at the size of the market, we probably occupy 3-4% of the UK market. Forget even thinking about Europe or any other global countries. And so the opportunity is just so big. I think that there's just I think it's going to be super exciting. I think you'll continue to see big investment. I think you might see some consolidation, but I think the leaders will really start to emerge in the next few years.
No, I agree. I do think it's early days. I think as much as we've seen how quickly some of these companies have emerged from really small companies to now big companies in this space, I think people continually underestimate how big the opportunity is. It's measured in tens of trillions of dollars, and I think that we've just started. So I'm optimistic about the next few years as well. So listen, I want to thank our panelists, Kyrre, Laura, and Virraj. I want to thank everyone here who found this room at 12:30 for lunch, and enjoy the rest of NOAH. Cheers.